Hey, what's up guys? It's your boy 007, coming back from the New Year break and holiday breaks. So last time we were here was like late December. Took a break, took some time off to enjoy the holidays since there was so many days where the market wasn't trading and it was super low volume. So I took some time off, figure out some strategies and adapt a little bit more to the market. So for everybody that's coming back, happy holidays and happy new year. Wish, hopefully going into 21 we have a better year than we were in 2020. So let's dive into the market and see what the market outlook is for next week. So the last time I was on these charts, these are some notes that I wrote for the last video. Watch out for the dollar index to bounce as trendline support. Next week and market pulling back a little bit if that happens. So that was like 2 weeks ago. The dollar index bounced a little bit from here, and I guess the market probably pulled back a little bit, and now we're coming back down some more. So same thing probably still applies. Watching the dollar index to bounce on trendline support. Actually, we're probably going to be watching for the dollar index to reject and continue to move down. If more stimulus is coming, because we had heard talks about Biden saying that they're going to release like $1 trillion stimulus package. So we're probably going to look for support. No, actually not support. We're looking for resistance around this area, maybe the 90 something area. Let me pull that up a little bit more. So we got the bounce on the trend line here, and here. So we had a bounce today, especially, but the market didn't really pull back. So we could probably see it move a little bit further. I think we're probably gonna test like 91-ish. So 91.13-ish. So that means and the stimulus is coming. So what we're looking at is that next week is probably going to be a little bit bearish unless we have a gap up. Unless the market gap up, we're probably going to see bearishness, because that's what the dollar index indicator is telling us, because the dollar is actually moving up. Anytime when the dollars move up, the market moves down. So we're seeing some movement here. We had a slight rejection here. We could just spin off that, but if we move up further, the market's going to pull back more, and we can even see like $92. But fundamentally we're not seeing a reason for that. As far as QQQ, kind of worked perfectly. It came down to this trendline support here. So we had a nice bounce on the tech sector, and we came back to trend line, and now we're just moving back up. So QQQ is looking bullish as it held the support at 307. Oh, sorry, that was 303.75. Where did it? This is the lowest 305. So I guess the number is actually 305-ish. So we just change that to 305. So the tech sector is doing good. SPY sector is doing good. We had that double bottom that we called a while back. So I'm not much to say on it. There's not much play there. However, the last time XOF, we talked about XOF is the finance industry, right? So that's what it tells you up here. And with the Fed backing, approving stock buybacks for banks, look for the sector rotation back into the XOF sector and look for pullback and buying opportunities. So this was like 2 weeks ago, man, and goddamn, that aged well. So that was XOF. You know, last video was probably released around mid-December, so probably around here, around the $28. We talked about the Fed approving them and telling them they can spend more money. So we're hitting this double top area all the way from early 2020, man, from February, before the market started crashing, right? So we're hitting that exact same resistance right here, man. So if we broke above this, we're going up. Chances are we could see a slight rejection. Let's see a slight rejection and then just go up further. But overall, we're extremely bullish on the tech sector, on the financial sector. And I'll tell you why, because if you look at even the Russells, right? The Russell is usually small caps, usually like the sector that nobody really likes to touch or invest in because it's risky, it's shady. You know, a lot of companies go in and out, scam and all that stuff. But even this sector, man, even this sector had that double top and it just broke up above it and just kept running. You know, holy smokes, right? SPY as well, you know, had that double top, broke above, got everybody hella bullish, and then it became the great crash of September. Scam everybody, everyone got hurt, right? And then came back up again, pulled that double bottom again late October, scam everybody, but continues to ramp back up some more, you know. So even SPY is all the way above, I think it's like 10-11% above from the double top area. So I wouldn't be surprised to see financial sector eventually doing the same thing. Does that mean we buy weeklies? No, you know, you could pick up shares, pick up your favorite, you know, bank related stocks. Like for me, that's Bank of America. You know, I want to see Bank of America come back to like this area right here. So for Bank of America, they had to come back to $35 area. The sector is already coming back. I don't see why the banks can't come back. So next week, it's where we're gonna get into that juicy stuff. We're gonna see a lot of bank earnings reports. So we're gonna see what's up, and it's gonna either be really, really bullish or it's gonna be a little bearish. But overall, I'm leaning bullish. So that's pretty much it for the market review, man. That's what I think is going on for next week. I think overall we're probably gonna see a little bit pullback in the market. However, I'm looking for opportunity to buy in the tech sector, specifically, you know, Bank of America. I also like the oil sector as well. I think that's a pretty nice sector coming back. I mean, so talking about that double top from March, February, right? Oil sector is coming back to touch it as well. So this was the level right here, $46-ish, and then it started crash, going to negative, but we done a smooth recovery. It's coming all the way back. So $53 is like kind of that big resistance, and I think we can come back to it. You know, I wouldn't be surprised. XOM is something I'm pretty bullish on for the oil sector. There's quite a few other ones. This is just something I picked because they're such a big name, very popular. I think they could pull this double bottom off right here. So as you can see, I drew this double bottom chart and it's acting out pretty well, man. It's aging pretty well. So hit that double bottom here, came back here, hit that double bottom again. If we do have a full recovery and everybody just forgets about COVID, XOM could potentially go as high as $58. It's a solid, it's a solid recovery right here because oil is recover. They've been cutting demand and everything, and XOM is one of the bigger ones, so they could benefit a little bit more, and they could, hopefully they were able to catch some smaller companies through acquisitions and stuff like that. So that's something I'm very interested in. I personally won't buy much calls. I probably buy some shares and just hold on to the shares, pick up some dividend as well, and see where we go from here. But that's pretty much it, guys. Thanks for stopping by and watching the art market review and for checking us out. And if you want, you can always check our Patreon too as well to see like what other big stories that I think are driving the market. With that, you guys have a great week going on next week, and take care.